I want you to take a second and just look at your smartphone.
Or if you're driving, maybe think about those massive data centers that are currently training the next generation of AI models.
Right, exactly.
Yeah.
We usually obsess over the software side of things,
Yeah.
the chat GPTs of the world.
Or the chip designers, the flashy stuff.
Yeah, the flashy stuff. But there is this hidden layer underneath all of that.
A literal layer, actually.
A literal microscopic layer of material that makes high-performance computing possible. And the company making it isn't some Silicon Valley unicorn that just popped up 5 years ago.
No, not at all.
They are a 150-year-old Japanese mining giant, a company that started out digging ore out of the ground back in 1874.
Which is quite the pivot when you think about it, going from pickaxes and smelting pots to the absolute cutting edge of semiconductor packaging.
It really is. So, welcome to the Japan Stock Podcast. Today, for our deep dive, we are looking at Mitsui Mining and Smelting, also known as Mitsui Kinzoku.
And it's a fascinating one.
It is. Honestly, going into this research, I was thinking, okay, a mining company. But I came out of it thinking, no, this is a stealth tech giant disguised as a miner.
It's a classic case of what we call a pivot, but playing out on a century-long scale. We've gone through their integrated report for 2025, the recent earnings calls, and a whole stack of analyst notes for this.
And the mission for this deep dive is to figure out how a company with mining, right there in its name, ends up controlling 95% of the global market for a specific material.
A material that your smartphone literally cannot function without.
95% though. I mean, that's not just market share, that's a monopoly.
It's a kingdom.
Yeah.
But as we'll see, heavy is the head that wears the crown, right? They are going through a massive transformation right now. They're selling off huge, profitable divisions and basically betting the farm on the next generation of tech.
So let's unpack this. Mitsui Kinzoku. Who are they today? Because looking at the materials, they really don't seem to want to be called miners anymore.
No, they've completely rebranded their identity. At their core today, they define themselves as a material intelligence company.
Material intelligence.
That's the branding, yeah. But historically, this all starts with the Kamioka mine in 1874. Zinc, lead, copper, the really dirty industrial stuff.
The stuff you smelt.
Exactly, and they do still do that. The metal segment, smelting zinc and copper, is still their foundation. It's the cash cow.
It keeps the lights on.
It provides the steady cash flow, exactly. But the actual growth engine has shifted entirely to what they call functional materials.
And looking at their management strategy, this is where the CEO, Satoshi New, introduces this concept. He calls it ambidextrous management.
Right.
Now, I have to be honest. Usually when I see a term like that in a corporate report, my buzzword alarm immediately goes off. Is there actually substance to this?
I get that. It does sound a bit like corporate jargon, but in their case, it's actually a very disciplined strategy. Ambidextrous means balancing two competing instincts within the company. On one hand, you have exploration. That's finding new technologies like solid-state battery materials. And on the other hand, you have deepening.
Deepening meaning what exactly?
Squeezing more value and wider applications out of their existing assets. And the absolute star of that deepening side is a product called microthin.
Microthin. It sounds like a diet brand. Or maybe a raincoat.
Far from it. It's an ultra-thin copper foil. And when I say thin, I mean microscopic. We are talking significantly thinner than a human hair.
Wow.
It's used in semiconductor packaging, basically the complex housing that connects a silicon chip to the motherboard. You mentioned that 95% market share earlier.
Yeah.
That is specifically for microthin used in high-density packaging.
So if you have a high-end smartphone in your pocket, or if you're running an AI server, Mitsui Kinzoku is physically inside it.
Almost certainly. If it's high performance, they are in there.
That is just wild to me. So they took their knowledge of smelting copper, which is this big, hot industrial process, and figured out how to make it thinner and more precise than anyone else on Earth.
Precisely. It's a vibe check that's honestly hard to wrap your head around. You've got one part of the company wearing hard hats and dealing with molten ore, and another part in pristine clean rooms dealing with nanotechnology.
They're transitioning from digging stuff up to inventing the future.
That's a great way to put it.
But looking at their financials, this transition hasn't been just a straight line up and to the right. Looking at the chronological growth over the last couple of years, it looks like they are just coming out of a pretty rough patch.
They are. Fiscal year 2024, which ended in March 2024, was very much a recovery year. Operating profit bounced back to about 34 billion yen. And the main drivers were exactly what you'd expect given their new identity. The semiconductor market started recovering, And the weak yen really helped them, as it usually does for Japanese exporters.
And now we are in fiscal year 2025. The reports show a really strong start in Q1 and Q2, but there seems to be some hesitation from management about the second half of the year.
Right. The first half was strong because metal prices, specifically zinc and copper, were high, and the yen stayed weak. But management has issued a clear warning for the second half of the year. They are forecasting a dip.
Wait, if AI is booming right now and copper prices are high, why the dip? Is the AI bubble bursting for them?
No, it's not a bubble burst at all. It's much more mechanical than that. It's a mix of seasonality in some divisions and inventory corrections in others.
Inventory corrections.
Yeah.
That's a phrase that always sounds like a polite euphemism for something bad.
Well, in this case, it means their customers, the big chip makers, bought an absolute mountain of copper foil during the post-COVID boom and the initial AI hype cycle.
I see.
So they're sitting on warehouses full of the stuff. Until they burn through that existing stockpile, they aren't ordering as much new product from Mitsui Kinzoku. It's a digestive pause rather than a demand crash.
Got it. So the underlying demand for the chips is there, but the raw supply is already sitting in the customer's warehouse.
Exactly. And amidst these ups and downs, they made a massive strategic decision recently. They sold off a huge chunk of their business.
Yes, the sale of Mitsui Kinzoku Act, this was their mobility segment.
Right.
And just to be clear for you listening, this wasn't some tiny side project. What exactly were they making?
Automotive door locks, latches,
Right.
powered sliding doors for minivans. They were a major Tier 1 automotive supplier.
They were making door locks for decades.
For decades, and they were really good at it. It was a solid, profitable business, but they sold it.
Why sell a solid business that makes money? That seems totally counterintuitive.
Because it doesn't fit the material intelligence identity anymore. Think about it. Making door locks is labor-intensive assembly work. You need huge factories full of people physically screwing parts together.
Right.
It's not high-margin material science. An analyst would look at this and tell you it's a move to improve capital efficiency. Specifically, a metric called ROIC, return on invested capital.
So they're basically cutting off a limb that, while totally healthy, was slowing down the runner.
That's it. They want to focus purely on high-margin materials where their intellectual property gives them a deep moat. They don't want to be an assembly company anymore.
It's a bold move.
It is. It signals to the market that they aren't sentimental about their history. They are ruthless about their future.
That is a fascinating pivot. Okay, I want to get into the geography of this operation. Because when we talk about supply chains, we usually just wave our hands and say Asia and leave it at that.
Right.
But reading through their regional analysis, it seems like specific countries are causing very specific headaches for them right now.
Absolutely. You cannot treat Asia as a monolith here. It's a patchwork of different risks and tailwinds. Let's start with Taiwan.
The home of TSMC and the heart of the chip industry.
Right. Now, normally, a weak Japanese yen is great for Mitsui Kinzoku because they export so much. If the yen is cheap, their products are globally competitive, and their foreign earnings translate to more yen back home.
Sure.
But in Taiwan, they actually faced an FX trap, a foreign exchange trap.
A trap? How did that work?
Their copper foil business is extremely heavy in Taiwan. They have manufacturing there. And they faced a situation where the new Taiwan dollar strengthened significantly against the US dollar.
Okay.
Because of how their specific contracts and local costs are structured, this cross-currency movement created a nasty non-operating expense surprise.
So they sold plenty of foil, but the profit basically got eaten up in the complex conversion between the US dollar, the Taiwan dollar, and the yen.
Essentially, yes. It masked how well the actual operational business was doing. It's one of those granular details that often gets buried in the footnotes, but it took a real bite out of their bottom line.
Wow.
And then you have India.
You mentioned catalysts earlier.
Yes. Mitsui Kinzoku makes exhaust gas catalysts for motorcycles and scooters, and India is obviously a massive market for two-wheelers.
It's huge.
The sales volumes there surged recently. Why? Because of the Diwali sales season?
Ah, the Festival of Lights.
And apparently the festival of buying scooters. But here is the risk with India. That demand is highly seasonal. Everyone buys right before the holiday, and then demand falls off a cliff for a while.
Which creates lumpy earnings.
Very lumpy quarterly earnings. If you just look at the raw chart without knowing the cultural context of Diwali, you might think the Indian business completely collapsed in Q3. It didn't. Everyone just went on holiday and stopped buying scooters for a bit.
And then there is China. Always the elephant in the room.
A total double-edged sword for them right now. On one side, the property market slump in China is very real, and that drags down general industrial demand for base metals like zinc and copper.
Because if China isn't building giant apartment blocks, they don't need as much galvanized steel or wiring.
Huge drag. It hurts their metals segment. But China is also a global hub for server production and electronics assembly.
Right.
So while the old economy construction sector is pulling them down, the new economy part, the demand for high-tech server parts, remains a powerful tailwind. They're caught right in the middle of China's own economic transition.
It's fascinating how one single company can act as a barometer for the entire global economy like that. You can literally see the Chinese property crash and the global AI boom fighting each other on the exact same balance sheet.
That's the reality of being a fundamental material supplier. You are the canary in the coal mine. Or I guess the copper mine in this case.
Nice one. Okay, let's go deeper into those core businesses, the real growth drivers. We talked about microthin, the copper foil. We know it has a 95% share. We know it's important. But why is it so critical for AI? Why can't NVIDIA or whoever just use regular copper foil?
It comes down to physics. Think about a modern AI chip. It is getting smaller, it's vastly more powerful, and crucially, it runs much, much hotter.
Right.
To get the performance you need without the chip melting, manufacturers are using what's called high-density packaging. They are stacking chips vertically and packing the circuits tighter together than ever before.
Like building a skyscraper in a city instead of a sprawling ranch house in the suburbs.
Exactly. Standard copper foil is just too thick for the skyscraper. It takes up too much physical space, and more importantly, it cannot handle the incredibly fine-line circuitry needed to move data at those speeds.
I see.
Microthin is so thin, we're talking single-digit micrometers, that it allows for incredibly precise microscopic circuit patterns. This means you get more processing power in the exact same footprint with better signal integrity.
So if you want a smarter, faster AI, you physically need thinner foil to build the brain.
You do. And right now, Mitsui Kinzoku is one of the only companies on the planet that can mass produce this stuff at the extreme quality level required by the big tech giants.
But we mentioned that inventory correction earlier as a risk. Is that the only headwind we need to watch out for?
No. There is another major driver in the notes that really caught my eye. Something called the Hachinohe factor?
Hachinohe. That's one of their main smelters in Japan, right?
Yes. And this is exactly the kind of hidden business logic that retail investors almost always miss. The Hachinohe smelter is scheduled for a large-scale regular maintenance period in March and April of 2026.
Maintenance, like shutting it down to change the oil.
Like shutting down a massive, complex industrial facility to completely rebuild parts of it. This only happens once every few years.
Yeah.
But because it crosses the end of fiscal year 2025 and the start of fiscal year 2026, it's going to act as a significant drag on earnings.
Production stops, meaning no revenue from that plant, but costs go up because you're paying millions for the repairs.
Exactly. They are forecasting significantly reduced zinc production volume during that window. The crucial analyst takeaway here is this. When you see their profits take a noticeable dip in early 2026, it is not because nobody wants zinc anymore.
It's not a macro demand failure.
Right. It's simply because the factory is literally turned off for repairs. If you don't price that schedule into your models, you might panic sell when the news hits the wire.
That is a pro tip right there. Don't panic over scheduled plumbing repairs. Okay, so they have the dominant foil, they have the traditional smelters. But you said they're inventing the future with the exploration side of their management. What actually comes after copper foil?
Two big things stood out in their R&D pipeline. First is HRDP, which stands for High Resolution Debonding Panel.
Kitschy name. Marketing really needs to work on that one.
It's a terrible name, but it's amazing tech. It's essentially a specialized glass carrier for next-generation chip packaging.
A glass carrier.
Yeah. Imagine you were trying to build these new ultra-thin chip structures. They are so microscopic and flimsy that they would literally break if you tried to move them down an assembly line.
Oh.
You need a temporary, perfectly flat support structure, a carrier, to hold them securely while the robot builds the chip on top of it. HRDP is a glass carrier that allows for even finer, more complex fan-out packaging than the copper foil does. It's designed for the absolute ultra-high end of the market.
Wow. And the second thing in the pipeline?
A-Solid.
That sounds like a 90s rap group.
It stands for their solid-state battery electrolyte.
Oh, wow. the holy grail of the EV industry.
Everyone is chasing solid-state batteries for electric vehicles. They're safer, they offer longer range, and they charge way faster than current lithium-ion. But the hardest part to get right is the electrolyte material inside.
And that's what A-solid is.
Right. Mitsui Kinzoku is betting massive amounts of R&D on mastering this solid electrolyte powder. They are deliberately shifting resources away from the cash cow mining side to fund this specific research. If microthin is their present dominance, A-solid is their bid for future dominance.
It's incredibly risky, though, isn't it? I feel like solid-state batteries have been, quote-unquote, 5 years away for the last 10 years.
It is a massive risk. But here's their unique advantage. They are purely a materials company. They don't have to figure out how to build the whole car. They don't even have to manufacture the finished battery cell.
Right, they just sell the ingredients.
They just have to provide the highly specialized, perfectly engineered dust that makes the battery work. It's a much safer bet than trying to be a new car manufacturer. But still, the timing for commercialization is the big unknown.
Let's talk about the money. For you listening, if you're holding the stock or thinking about adding it to your portfolio, how is management actually returning value? We mentioned ROIC earlier.
Yes, and this is really the key to understanding the modern Japanese corporate landscape. For a long time, Japanese companies were heavily criticized globally for hoarding cash on their balance sheets and just ignoring capital efficiency.
The famous Japanese value trap.
Exactly. But Mitsui Kinzoku has introduced ROIC spread as their primary key performance indicator in their 2025 midterm plan.
Break that down for us. ROIC spread. What does the spread part mean?
Okay, every company uses money to do business. Money from shareholders or loans from banks. That money has a cost. The interest you pay the bank or the return your shareholders demand. That baseline cost is called the weighted average cost of capital, or WACC.
Okay, so the money to run the business isn't free. You have to beat the cost of getting it in the first place.
Right. Now, ROICs is the actual operating profit they generate using that money. The spread is simply the difference between the two.
I see.
If the ROIC spread is positive, they are actively creating value. If it's negative, they're destroying value, even if the division is technically reporting an accounting profit.
And that perfectly explains the sale of the mobility and door lock business we talked about.
Exactly. The door lock business made a profit, but its ROIC spread was likely too thin or even negative. It tied up too much capital in factories and labor for too little return. By selling it, they instantly improve the overall efficiency metric of the whole company. They are signaling loud and clear that they only want to keep businesses that significantly beat their cost of capital.
That is ruthless efficiency. I love it.
Yeah.
What about dividends, though? Are they paying out?
It's stable. They are forecasting around 140 yen dividend. They aren't aggressive dividend growers right now. They are firmly prioritizing organic growth.
Meaning reinvesting in the business.
Yes. Taking that cash and spending it on capital expenditures to build more copper foil capacity, and funding that massive R&D budget for the solid-state batteries. They are choosing that over massive share buybacks for the time being.
So they believe the best way to reward shareholders long-term is to become a much bigger, vastly more profitable tech materials company, rather than just handing out cash today.
Precisely.
So if you're an investor looking for a quick buck or a massive immediate yield, this might not be the play. But if you fundamentally believe in the physical infrastructure build-out required for AI and EVs,
then it's a very compelling story. They are effectively a pure infrastructure play on AI and electric vehicles, but they're still priced somewhat like a legacy mining company.
that seems to be the real arbitrage opportunity here. So let's wrap this up. We have a 150-year-old company that started with pickaxes, successfully cornered the global market on ultra-thin smartphone foil, and is now betting its future on glass chip carriers and solid-state battery powder.
They are successfully shedding their skin. What you're seeing is the slow death of the mining discount.
The mining discount.
Yeah, where investors historically valued them lower because they thought they were just a cyclical commodity company. That discount is disappearing as they continually prove they are a critical tech material player.
What are the big variables to watch over the next year or two? If I'm tracking this company's quarterly reports, what am I specifically looking for?
I'd say three main things. One, the speed of the AI server market adoption. If data center build-outs slow down, the demand for microthin slows down with it.
Makes sense.
Two, the Hachinohe smelter maintenance in early 2026. Can they navigate that major shutdown without unexpected operational hiccups or cost overruns?
Number three.
Commercializing the solid-state battery tech. Can they successfully move a solid from the R&D lab into mass production at scale? That is their moonshot.
It's just a fascinating corporate transformation. It really challenges that persistent idea that true innovation only happens in garages in California. Sometimes the most critical innovation happens inside a century-old smelter in Japan.
Because knowledge builds on knowledge. You can't invent the advanced microscopic stuff if you don't intimately understand the basic elemental properties. And frankly, nobody understands zinc and copper better than a company that's been staring at it every day for 150 years.
That's a great point.
All right.
Here is my final thought for you to chew on, listeners. Mitsui Kinzoku completely dominates the copper foil market today because they had the foresight to pivot years ago. But as chip packaging continues to evolve, and as the auto industry fully abandons combustion engines, the landscape is violently shifting again. The real question isn't whether they can grow, but whether a 150-year-old heavy industry giant can move fast enough to become the indispensable backbone of the solid-state battery era. Or will they get stuck holding the bag of legacy tech while some nimble new startup takes the lead?
That really is the multi-billion yen question.
It is. That's it for today's deep dive into Mitsui Kinzoku on the Japan Stock Podcast. Thanks for listening.
Thanks for having me.
We will catch you on the next one.